Perfect. Thanks a lot for the invitation, and thanks a lot also for the introduction. I think you might have heard a lot of those questions already, but I think one common question is always like, what about institutional adoption in the crypto space? And I think I heard a couple of talks earlier here before, and I think that's a topic which is always coming up. And I think if you listen to people, if you read newspapers, there's always two sides of the medal, right? So on the one hand side, you hear institutional adoption is coming, institutions are entering into the space. And on the other hand, you always hear, okay, the basic requirements, the institutional requirements which institutions need to get into the space are not there yet. And I think I have the pleasure in the next 15 minutes to share a little bit like what we see as Finoa, what we have learned over the last 4.5 years. What are institutions' requirements when dealing with digital assets, when managing their digital assets, and where are we actually also in the process of building those foundations to get institutions more and more into the space. Maybe before we start talking about what are the requirements, we should define what are the institutions we refer about if we talk about institutions in crypto, in the digital asset space. And I think what you see on the upcoming slide is that there's quite a wide range of institutions you can talk about, right? So you have on the one hand side the newcomers, so the novice institutions, which have limited knowledge, limited experience, and mostly have allocations to, let's say, the two blue chips, Bitcoin and Ethereum. And that is mostly players out of the, let's say, industrial economy like Tesla, SAP, MicroStrategy, who are playing around with crypto, who are trying to understand use cases, etc., etc. You have traditional institutions, mostly traditional financial institutions, who are entering or have entered the crypto market already, and beyond of, let's say, pure allocation to Bitcoin, pure allocation to Ethereum, they also are looking to get exposure to more established mid-cap tokens, and they also start to interact with DeFi, be it through partnerships, custodial services, etc., etc. You have crypto-aware institutions, how we call them, which aren't, you see it by the names there, mostly asset managers, alternative investors in that sense, who have built up dedicated crypto teams, dedicated crypto knowledge, who have a very broad set of assets, and that broad range of assets also enables them or requires them to use more and more services in the DeFi world, speaking about yield farming, liquidity provisioning, also lending and borrowing. I think more on the right side, more on coming towards the crypto, let's say, experienced or later also crypto native experience, you have the so-called active DeFi participants, which are institutions who are actively engaged and actively knowledgeable about DeFi. They invest a lot of their time, a lot of their resources into the space, and they are also the ones who are fueling the evolution from the capital side of things. That are mostly venture capital funds who are focused on crypto, like A16Z and Andreessen Horowitz, for example, or crypto VCs who have been born in that area, like Polychain or Pantera. Last but not least, we have the so-called crypto-native institutions. I'm not going to spare too much time on these, but those are basically the institutions which have been born in the crypto space and which are actively promoting and developing the space, be it through new protocols, be it through new DeFi products, etc., etc. And I think what you see very nicely on that slide already is that if we talk about institution, it's a broad range of different players we are talking to. And I think what we always think about is like, what are the different requirements which these players are looking for, which they are in need of to get into the space or to manage their assets. And I think from our point of view, you can kind of compare the requirements of institutions a little bit with Maslow's hierarchy of needs, right? So at the bottom level, at the basic level of requirements, you have custody, which is on the one hand side the technological custody, which is the technology, the safeguarding of the private keys, but you also have the whole operations around it. If you do custody nowadays. Staking is something which is crucial, especially for more crypto-native investors or crypto-native institutions, with the uprise of proof-of-stake protocols, Ethereum moving to the space, etc., etc. I think on top of staking, we see prime brokerage or brokerage in general, and then prime brokerage, which is a 24/7, 365 days access to trading, access to liquidity, but also advanced features like settlement, advanced execution, etc., etc. On top of that, we see more and more traction on everything which is called on-chain participation or governance, which can be decentralized voting, especially if we're talking about decentralized protocols, but also things like token claiming, vesting contracts, etc., etc. And something on top of that, which we are seeing especially increasing over the last 12 months, is what we call on-chain capital markets. So for those of you who are in the space, real-world asset will be a term which you might be familiar, trading on decentralized exchanges, providing liquidity to different liquidity pools, etc., etc. And I think underneath all of this, and this is what has been flying in as latest, is the whole topic about regulation. And I come later to that, but I think we have to differentiate a little bit, like what is the product view and what is basically the regulatory, the compliance view of things, but more indeed to that later. I think if we take a look at that pyramid and the different players in the space, what we see is that there are movements on both ends. And despite the bear market, I think we have seen a lot of things happening over the last 12, 16 months. So on the one hand side, we have seen traditional and again more traditional financial institutions continuing to tap into the ecosystem. I think the most recent news of BlackRock filing for an ETF, or Deutsche Bank here in Germany filing for the crypto custody license, are very, very good examples. But we also see that most recently here in Germany with SAP, who are trying to integrate stablecoin payments in their ERP systems. On the other side, on the more crypto-native side, we also see a lot of developments coming obviously more from the technological aspect. So talking about optimistic or zero-knowledge proof roll-ups, we see next-generation layer ones like Celestia coming up. We see the whole movement around real-world assets. So I think this term, like the bear market is there for building, is also something which we have been seeing over the last, let's say, year and a half on that end. I think what's still very important to mention, though, is yes, we see developments on both sides, but some of those basic requirements institutions are looking for are still fragile to a certain extent. And I think 2022 has been the year which has shown that quite tremendously. If we just take a look at the logos, and those are just a few examples of companies who haven't made it through the bear market, like Celsius, FTX, Terra Luna, etc., they have revealed a lot of problems which are still prominent and which are still eminent in the whole crypto market. And I think all those developments have risen the voices of those people who are basically forcing or recommending more compliance, regulation, etc., etc. And a couple of terms we have listed here on the right-hand side. So starting of secure custody, asset segregation of customer funds and the company's fund, bankruptcy protection. So what happens in the case of insolvency of the exchange or the custodian, and everything around like transparent asset movement, so be it for AML purposes or also be it for auditing purposes. And I think in all that context, regulation has been coming up more and more. And I think if you take a little bit a look what has happened over the last 6 months, especially in the US, but also in Europe and in Asia, you see that regulation really continues to change the game. We see in the US like a big crackdown on crypto coming from the SEC. We see in Europe a very progressive regulatory approach, regulatory framework with things like MiCA coming into play, or BaFin, who actually has since beginning of 2020 the framework, what a crypto custodian is, what a crypto custodian has to fulfill in terms and requirements. And then you have like a growing but also fragmented market in Asia, with Singapore and Hong Kong, I think also seeing a lot of traction. So I think what you can conclude is, and I think that's also ending up in the conclusion of that presentation, is that what we are seeing right now and what we have been seeing over the last 12 months, over the last 16 months, is that the crypto ecosystem again is undergoing big pivotal changes. And I think the aftermath of 2022 has actually shown that to thrive, this industry needs work on both ends. On the one hand side, on basically the institutional adoption, so enabling institutions to get into the space, but on the other hand, also more innovation, more disruption coming from the crypto native side and building for the crypto native side. And I think what we really want to highlight is that if we talk about that institutional requirement, we need a fully regulated counterparty, and we need that counterparty to be in a crypto-friendly environment, which Europe is currently displaying. And I think this is where we as Finoa come into play. So started in 2018 through bull and bear markets. So that's not the first bear market we are actually going through. But through the whole cycles over the last 5 years, we have grown Finoa to one of the largest institutional crypto providers in the world. We hold the fully qualified custody status, hold 3 different licenses by BaFin, the German regulator. And provide, that we see here on the next slide, provide a variety of services for institutional investors, for institutions in general, to enable them to get into the digital asset space, to enable them with curated access to the space, and do that via custody, staking, governance, and on-chain participation. And if you see a little bit, going back to the pyramid which we showed you, that's basically the pyramid we as a company also build towards. So fulfilling the basic needs with custody, but then building on top of that to enable customers, to enable institutions to embrace the full potential of crypto. And closing the presentation, we end like with one slide which shows a little bit of our customer base, because that's also quite a nice closing of this. Because if you remember the first slide, I have shown you the different players in the ecosystem. You see on our end more traditional institutions like T-Systems, Deutsche Telekom, for example. You see a lot of crypto VCs like Polychain Capital, like Nima Capital or BLOCKCHANCE. And then you also see a variety of crypto native companies, like be it Consensus, be it the foundations who are building and also governing the crypto protocols, like the NEAR Foundation, Oasis Foundation, etc., etc. So we are really building along that pyramid, that hierarchy of needs, and we are building that for the whole range of institutions, which is out there, which is in the crypto space already, but which is also, let's say, entering the crypto space in the near, or let's see, at least midterm future. And with that, if you're interested to learn more about, we have our contact data there. We also have a booth upstairs, so always happy and always welcome if you give us a visit. Thank you.